I have good trades and bad trades. Now, most important, which no other gurus do, is I'm going to talk about how I was feeling, the psychology behind my trades, because I made some mistakes. So I'm hoping in my transparency, if I share those mistakes with you, the next time you guys get to that situation, you go, okay, I'm up X%. The chart looks good. Matt told me take profit. However, he had a situation, and I'm going to get into it right away with the stock QS. Now, I had call options in QS. I'm going to bring up the chart, so stick with me here. Let me see if I can figure out how to do this. Let's get that chart up. Let me go over to that board. Okay, so the first thing I do is I bring up the 1 month chart. So I can first show you exactly what piqued my interest. Okay, because there has to be inflow and demand to pique my interest. I look for inflow and demand, which is what you see on September 20th, the 22nd, and the 23rd. Those big green bars, okay? Inflow, demand. The stock peaked at $27. Now I say to myself, it's on my watch list. I want to look for the right entry. So the right entry is once a stock spikes, because nothing goes straight up, we look for consolidation where it finds its new floor. So that's what I'm watching. So the first day there's outflow, and then volume gets a little lighter each day, which is exactly what you want to see when you're talking about a bullish chart. You want to see the outflow getting smaller and the inflow getting larger. And on days where you have a large inflow, the stock will spike. Now, please tell me you understood that, because that might be the most important lesson today. If you understood that, you're going to understand, and you're going to be able to see when a stock's about to turn around and you say to yourself, the next time they have demand on a day, my stock is going to spike. See, unlike other gurus, I don't tell you what stocks to go in. I'm trying to give you the tools to figure it out for yourself. So I talk about charting a lot. The 1 month chart, it shows you inflow, outflow, and demand, volume, basically. The 5-day chart, which I'm going to go to right now, so I can show you my entry points and my exit points, shows you the momentum or the direction of the stock. So as you can see, it started over here and it's ending over here. So it's kind of a diagonal slant going up. So it is bullish. And then you look at the 1-day chart usually, which tells you your entries or exits. So if I were in the stock on Friday when it spiked, and I always talk about selling your option when it spikes the most, I'm going to sell it over here. But honestly, I'm probably going to sell it over here because I'm a chicken and I'm a paper hens. And as soon as I get the good spike, it would spike up here and I'd be like, great. And then it would retract and I'd be like, I'm getting out before it goes any lower. And then it went even higher. Okay. So that's a mistake I make. Now, what I tell you guys to avoid this mistake is wait until 10:30 or 11 a.m. Eastern time. And that is when, if your stock is spiking, it'll spike the most usually. And when your stock is going down or they're selling off your stock, it'll sell off the most. All right, so we'll go to the 5-day chart. Now, remember, it's on my watch list. I looked for entry. Where was it? It went and spiked up. Right about here, I got my first entry with $23 calls, okay, that were expiring this Friday. I paid $67 per contract, okay? Let me just, well, I'll save that for the end, tell you what I sold them for, okay? So I paid $67 per contract. It started going up. I said, winning trade. I don't have to average down anything to that extent. And then boom, it went down even lower. Now, at this point, I paid $27 per contract for the same contracts. The contract went as low as $25. So I missed calling the bottom by about 10% or $2, but I did a good job and I was happy thinking that when it goes back up, which you can see happen right here, I will be making money. So I went from being not profitable to being profitable, and then it went down here for me being not profitable again. So when I talk about the lesson of riding the elevator, when you ride it up, you're like, hey, I'm up 40%, and then you're like, oh, I'm down 20%. Options are volatile. You can go up 50%, you could be down 50%. You could turn it around. And I'll mention my small trading account in a minute and how that turned around on Friday. But first, transparency. So stick with me. So we get to Thursday. Thursday morning opens. QS dives down. And I'm like, oh, shoot. Okay. I'm pretty sure it was going to go up today. Don't think I'm going to be wrong. I'm going to average down again. So I bought a third allotment of options. The same options, same $23 strike for $27. Yet again, taking my average down to $37. Okay. At this point, I told myself, I think QS is going to go up to $24.50. Now, since I have the option to buy at $23, I should be able to sell those same options that I paid $27 for $1.50 if I'm right. So I was like, okay, great, great, great. So it spikes up, and I say to myself, nothing goes straight up, nothing goes straight down. I can get about 60 cents or $60 per contract. Remember, my average is $37. I can get 60. So I could be making about 60% on this trade. So I said to myself, nothing goes straight up. Let me get out. So I got out, I sold. All right, I took profit. Now I'm sharing because I made a mistake. I didn't give myself long enough time to be correct. Now, I still had 3 contracts in my small trading account, the Felix Challenge, that I paid $35 for those options. Now, as you'll see, the next morning at open, there was huge volume, huge demand. You see the part I'm circling right here? And the stock spiked all the way up over $24. At this point, I sold the small account option. I paid $35 per contract and I sold them for $35. Now, the point of this story is I was down 80%. So that $105 was down to like $25, $28, something like that. It's back to 105. I exited out. Now, if I didn't have paper hands or weak hands or scissor hands in this trade, I would have sold up here, and those same contracts were worth 80% more. I could have sold them for close to 50 cents. So I was upset because my small account of $105, which was the whole challenge, would have been up to $185. But again, small account. So I'm sharing with you, I understand. You get nervous. You're like, oh, I'm finally profitable, and you want to take the profit. Which is why when you enter into a position and if you call the best entry, you never have those shaky moments. You're like, I'm up 50%. Oh, it's only 20%. Oh, now it's 70%. I'm glad I stayed. Now, if you got in at the wrong time, you're like, I'm up 20. I'm down 40. I'm up 20. I'm down 40. Oh, I don't like being down. So psychology, your emotion takes over and you're like, next time I get up 20, I'm selling. So the next time it goes up 20 and then it spikes even higher and you're like, you sold at 20%. So you made profit, but you didn't give yourself a chance to be right. All right, so some of you don't trade options. So let me pull up another chart for you. We're going to pull up CEI, which is Camber Energy. So Camber Energy, let's just move this here so we can all look at the chart. That's the 5-day. Let's look at the 1 month. So this is a meme stock, an energy stock. I call it a meme stock because we're not really sure the true valuation. But we know that YouTube and internet stars or gurus like Mr. Zach Morris was saying, this stock is worth $10. So the stock started going up, 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 up. And then we know that one of these hedge funds issued a short report saying the true valuation of Camber Energy was less than $1. So the stock dropped. Boom, boom, huge selling here, huge selling. And I got in at $1.36, thinking I would swing the trade to $1.76, which is what I told people on my platform. $1.36 here. I was so proud. I was showing off $1.36 and $1.36. And I'm like, it's going to go up to $1.76. Instead, the short report came out that same day that I bought in $1.36, and it dropped all the way to 90 cents. Now I'm going to show you the 5-day chart so we can better follow along. So here it is. And as it's falling, was this the part? Yes. So this is the part. As it's falling, I try to catch a falling knife. I'm like, I know these traders. They'll never let it fall without spiking it back up. And on that spike, I'm going to make a quick 20%. But rather than doing that, and I'm going to show you, it went up here. It was like $1. Where was it? No, $1.19. Okay, so here's where I caught the falling knife on this trade here. Because I already saw here they tried to make it rebound. And when I say they, I mean the retail trader, you guys. You're like, oh, it's going to rebound. I'm going to hop on. I'm going to get along for that quick momentum ride. So I'm watching it. And I'm like, okay, here it is. It's coming. The momentum's coming. It might be a few days, but it's definitely coming. Now, I understand we all like instant gratification. So I get in. It's going here. 136, I get in. It's at 153. I get in 136 on the way down. Circle right about here. And then as I get in, it's even going lower over the next day. Then the short report, then it goes out to 90 cents. Now, I am no AMC ape, because an AMC ape would have bought more at 90 cents because it has limited downside. And I understand that it had limited downside, but I was scared. So I'm giving you my emotional insight again. I knew what to do. I was supposed to buy more at 90 cents. I told myself, buy more at 90 cents. You don't need to wait till it goes up to $1.76 because that's like 100%. So that's what my mental game was telling me. Dude, if you buy at 90 cents, you still think you're going to get $1.76 out of this trade? It's not going up 100%. You're going to be the heaviest bag holder in your entire portfolio, and it's going to be a penny stock, which I hate. I hate penny stocks. So I didn't average down. I said, I'm just going to hold the bag that I'm holding. And what happened is I was basically correct, and there it is. It bounced right back to this level. And then when people saw it bounce to that level, psychology, they want to get on for the ride. They want to get on for the ride. They want to get on for the ride. Now I sold here. I sold $1.53. I alerted my platform $1.53. Do you guys see all the room I'm missing out on? I could have held. Oh, $1.63. I could have held. $1.77. I told everybody I think selling here is a good idea too. $1.77 it was. I did. I told everybody. I don't mind if you're in at 90 and you sell at $1.77. You're making 97%. I teach you guys, don't be greedy ever. It's a good way to blow up your account. You get greedy, you miss the opportunity, you ride the elevator up, you ride the elevator down. Okay, so those who held, I mean, if you're holding till 230 or 2 whatever it was, congratulations. I mean, it's back down here. Now, I don't have any opinion going forward. I mean, if I look at the chart, I mean, it really depends because you see here's outflow went down, inflow, there's huge volume. So who's going to win? Is it a bull play? Because we know Zach Morris has a bunch of followers, 500,000, million, whatever it is. And then you know that the hedge fund that shorted the stock, they have a game plan. They have allies and other hedge funds. So they're like, listen, we're going to pump this stock down to 50 cents and we're all going to get bleeping rich. So that's the scenario there. All right, another trade I want to talk about this week is UVXY. I hope this is still up on the screen because I haven't checked back with you guys. So let me see. It is. Okay, so UVXY, let's move this up. Let's go to the 3-month with the UVXY. Why? Okay, first off, the UVXY is a measure of the volatility of the futures. So you go forward, you say the volatility 3 months from now, because you have the VIX, which measures current volatility. And this is supposed to be like 1.5 times the VIX. I know there's certain equations. It doesn't make sense. It's future volatility. But let me tell you what I do know, and I'm going to simplify it. The UVXY will spike when there's any trouble, like there's debt ceiling concerns, China concerns, oil, or ransomware on those oil pipelines. Maybe a shipper tanker goes down or something like that. Then the UVXY can spike if it has economic impact on the market. If there's an oil shortage, an energy crisis, something like that. Disruption in politics in important countries, maybe like in Russia or China. If there's instability, the VIX will spike and the UVXY will spike. Now, here's why I brought up the 3-month chart, the year chart. In the year chart, you can see all this ETF does is go down. Okay, if this was a stock, you'd say it was going to zero. And you're probably correct. Now we'll look at the 3-month chart. Every time you see a spike where there's volatility or uncertainty in the market, it always comes down a few days later. Bum, bum, bum. There's a spike, comes down. And when it spikes with pretty decent volume. I mean, you look at 9.6, 9.17, 9.20, boom, that Friday and that Monday when we had that huge sell-off, look at that. I mean, it spiked like, 40%. Now, the great thing was I enter into puts. Every time it spikes, it goes down, it goes even lower. So you know that within 2, 3, 4, 5 days, if it spikes, it's going down. All right, so let's go to the 1-month chart here so we can narrow it down. Here you go. Huge inflow, goes down 4 straight days. Here we go. People are talking about debt ceiling. It kind of spiked. There was demand for 4 to 5 days. This was on Monday, so we're going to go to the 5-day chart because on that Monday, right around here at 10:14 in the morning, that's when I first bought my puts. And I'm like, the market's going to get stronger. Don't worry about it. I'm going to be correct. And then that whole day, I'm thinking to myself, geez, I might not be correct. What if the market sells off the next day? This thing will spike higher. I'll look so foolish. But I said to myself, I'm undefeated. Just so we're clear, I've never lost a battle against the UVXY. Undefeated. Every trade I've ever made on UVXY, I'm correct. Why? Because I never play calls unless I know it's going to spike, which is probably like 2 or 3 out of my last 100 trades. But I always play puts, and I don't have to play puts every day. But if the market is strong, the UVXY will go down by 2, 4, 6, 8%, depending on the strength of the market. So in options play, that's generally anywhere from 15 to like 70%. It's a huge day right there. Again, you're looking for volatility. It spikes, you buy puts. All right, so here we are. I'm thinking I could be wrong. Then Tuesday comes along, and Tuesday was green. Boom. And then we spiked down in the markets. The UVXY spiked up again. But you're still holding because as I tell everybody, and here's the strategy with UVXY, given the time, the UVXY will continue to go down. So if you're purchasing puts anytime it spikes, here, 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 because you have multiple times. Now, usually, here's a lesson. When the UVXY spikes, it generally spikes 2 to 3 times in that day. So you'll see this day it hit the ceiling 1, 2, 3, 4, 5, 6, 7. Here, 1, 2, came back 3, 4, 5. Okay? But all we know is it does go down after time. So we'll go to the 1 day chart here. Again, you're following volatility, and this is just for the day. I was out of the position. I secured 94% and 114% on my two UVXY trades this week. Puts going down because as you can see, the 5 days started here. I bought here. It went all the way down there. So it went from $25 to $20.50. It dropped what? Almost $5. That's like 25% of its value. Okay, so you look at the 1 day, and again, it just tells the tale of the market. This is just the point I'm sharing with you. It spikes, the markets are down, the markets start recovering, the UVXY goes down. Then the markets start to sell off, UVXY goes up. That's just the easy way to follow along. So if the markets drop and they go down by 800 points, you'll see the UVXY spike up 20 or 30%. So if you ever know the markets are going to fall, like you're like, okay, market's going to fall next week, I'm going to buy calls in the UVXY. Again, it's extremely risky because you're telling everybody that you're smarter than them in the market. I don't even buy calls because my timing's not impeccable. And there's a quick lesson for you guys. And let's get onto the main screen again. Here's the quick lesson. So I trade at 90%. So in all transparency, I don't make perfect trades. I did make one trade too early this week. Now I exited out of QS, which I told you was a mistake on Thursday, and I could have secured $17,000 more dollars on Friday if I held. Now instead of securing 17,000 more positive dollars, I entered into play on Thursday. PLAY, Dave and Buster's. It's a Dow play. I'm going to show you the charts. And it continued to sell off Friday when I thought Friday could be a turnaround. So I ended up dropping 8 out of the 10,000 profit on the week on Friday. So let's get to that chart so I can show you exactly what I'm seeing. Let's open that bad boy up. There we go. Let me get over to it. So I've got the 1 month chart. Let me go up to the 3 month chart first. So every time I see it dip pretty hard like this V here, 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 it recovers. So I just know that anytime it dips, nothing goes straight down, nothing goes straight up. We talk about that a lot. So I'm looking at the dip here, and we'll go to the 1 month so I can zoom in again. So inflow, inflow, inflow. They had earnings here, extremely light volume. Again, another inflow day, and you'll see volume stronger than the outflow days. Really light, light, light. And then there was a sell-off here, which was Friday when I'm expecting it to turn around. So I'm just going to go up in the 5-day chart, and you'll see a huge buy right here, institutions that are good and comfortable at $39.50. At $39.50 like I was on Thursday. So again, I was a little ahead of the institutions. I thought I nailed it, but the stock sold off. So again, instead of being up 10,000 on the week, I made 2,000 on the week. I gave back $8,000 in stock and options on Friday. Now the good news is my option on play does not expire until this coming up Friday, and I do suspect we're going to get a bounce back because as I showed you in the 1 month, every time we have a V, we have a dip. 1, 2, 3, 4 dips, recovers in 1 or 2 days. Dip, recover in 2 days. Dip, dip. I expect this recovery might take 2, 3, 4 days, but I'm pretty certain that I will turn this position into a winning position. Again, heavy volume, heavy selling right here. Everybody was unloading. Paper hands, scissor hands, gone. So again, all of my trades are not profitable, but 90% are. And I give you strategy, and I want to share my strategy. So if I can show you my mistakes where I acted too quickly in the morning, I traded before, let's say 10:30 a.m., which is one of my rules, or I got in a day too early because I'm looking for the recovery, but instead I caught the falling knife, like in Plug's case. Now again, put that on your watch list because I'm pretty confident I'm going to be correct this week. Oh, alert, alert, alert. Before you go, do me one favor, pound that like button and subscribe.